Oracle is about to deliver a solid beat on earnings. Similar to what we saw with NVIDIA, you don't go out and announce $455 billion of projected revenue only to miss earnings the next quarter. That said, the stock has been all over the place because their debt is also mounting. Let's talk a couple of game notes on Oracle ahead of the earnings call this week. Oracle is basically transforming into an AI compute company through their cloud infrastructure business. The majority of the forecasted revenue falls within OCI, and OCI has been booming. It's grown from 8% of revenue in 2023 to 22% of revenue today to what will be more than 50% of total revenue by the end of next year. The opportunity within OCI has been the primary driver of the stock's growth in 2025. First, we saw it rip up 43% over the summer and then jump another 36% after September's earnings. That said, a couple of weeks after that earnings call, the stock kicked off a downward trend to what has amounted to a 30% loss to date. Let's talk about why and what the analysts are saying. The problem comes in three parts. First, Oracle has all this contracted compute, but doesn't yet have the data centers to deliver it. So it's depleting its cash balances, levering up on debt to make all of this happen. Morgan Stanley is predicting Oracle's debt to more than double, nearing $300 billion by 2028. Second, the majority of the predicted revenue is coming from OpenAI, which has its own set of risks. So a bet on Oracle is increasingly related to a bet on OpenAI. Given some of OpenAI's numbers and their increased competition from Google, you're seeing Oracle stock take a hit. And lastly, the banks holding Oracle's debt are getting more worried about them defaulting. You're seeing the prices on the insurance for that debt, aka credit default swaps, rising, and that's also adding downward pressure on the stock. That said, we think Oracle's been a little oversold here. Larry Ellison has been in the game a long time, and it's hard to see him defaulting on billions in debt. The narrative around OpenAI can change very quickly, and we also think it's likely that Oracle will diversify with more deals announced in 2026. For what it's worth, Wells Fargo has a price target of 280 on the stock, signaling 32% potential upside from today. And Morgan Stanley's report from mid-October had a 320 price target. Thanks, guys. Make sure to follow along for the earnings debrief in a couple of days.